My name is Yakub Rahimov. I'm a professional trader and trainer, an upcoming book author called Forex Not for Dummies. Towards the end of the webinar, I will give some extra tips and tricks for the coming news and what to look for out of these news. Most of the speaking for today will be done by our surprise speaker, Mr. Jeremy. Jeremy is from the Netherlands. He's going to introduce himself now.
I'm Jeremy. I'm from the Netherlands. Let's do a short introduction. I started trading when somewhere in 2010, 2011. Started with some business companies, and from there on I said, yeah, trading is something I wanted to do, and I started learning more and more and helping people. We helped about 300 people starting with trading as well, and with psychology. And last year we were able to start trading for full time, so that's really nice. We are not where we wanted to be yet, but we are coming there. I come from an IT background. I don't know if people want to hear, but that's always had a good thing to use in trading, because you can write your own scripts and stuff like that, and you can automate it more if you want to. But yeah, that's my story in short.
Thank you very much, Jeremy. Guys, Jeremy has a specific motivational story for me. He started by learning things, and he made a goal for himself, helping others. And he just himself told that he has already helped more than 300 people to get into the game of Forex and help those people to stand on their feet against the obstacles of the market. Nonetheless, he has given up what he is doing to be a full-time Forex trader now. And I'm very proud of him, although I have never met him in person yet. I hope to meet him very soon. But there are a lot that I personally can learn from him. Therefore, we have invited him to join us today. Before we go ahead and start the main part of the webinar today, I would like to just inform that trading in foreign exchange or Forex market carries a high level of risk, and therefore it may not be suitable for everyone. If you have doubts, you must consult for a third-party consultancy, and you should be aware of all the risks associated with Forex trading. This webinar is going to be interactive. I highly encourage you to share your questions with us, and we will be doing all our best to give you the best available answer we can. Jeremy will go ahead and describe his technical analysis and outlook for three currency pairs once again, and end of the webinar I will comment about US PPI data and German GDP figures, what to expect, how to enter market, and where to expect the movement.
Every week, every weekend I do an analysis on all pairs I trade. Based on that analysis, I'm able to know what I want to trade the next week. And I always start from top down. I will start from the monthly down, and you can say, yeah, I use different colors to make sure that I do not get confused with the lines I draw on my chart. So like now I have the purple one for the monthly. I always look at the price. I will look at the price and see if the price is telling me something, and if it is a resistance or support, because that's what it's all about, right? The price action where you can see support, resistance, or zones, or whatever you want to trade. So on a monthly, I see here that clearly an ranging formation. If you look at the weekly is the aqua one. You could have equally the monthly line as well, but I do especially the blue one, the aqua one, to have a little difference, because then you see the difference between the monthly lines and trend lines or resistance lines, support lines, and the weekly ones. So yeah, the weekly is the same, is overall ranging as well. The daily I make deep pink. That's also a ranging formula, and that means that the price goes either way and is moving between the lines, and that it's respecting or that it's breaking. And now you see on the daily that the resistance line is just broken, and then I'll go on the 1 hour to see if we are able to see that we are able to trade something. And if you look here, you see that it just broke the weekly R3, the pivot. You see that the 1 hour is still an outline. If I wanted to trade this, I would have a buy limit at the 38.8, and from there I would have a buy limit with a take profit, which is in the middle of here, which line I didn't draw, which would have been nice. That would be my projection for this currency. I did this today. Just like I said, on Sunday I do this for all currency pairs I trade as well.
Just maybe if I could add something over here, Jeremy.
Yeah.
We had the Chinese devaluation for the last 2 days, if you can remember. Whenever there is some kind of uncertainty anywhere in the world, you would see the Japanese yen turning into a safe haven. We have already seen the reaction over the night from USD Japanese yen. However, Euro Japanese yen has not really reacted same as USD Japanese yen. Therefore, I would be cautious with my buy locations at this moment. And if I'm going for a long position at this given moment, I would be looking for the weekly resistance level at 137.80 zone. If I'm going for a buy entry. However, I'll come and comment on it during the German GDP figures conversation. If you have negative commentary for the German GDP figures, we will see a major drop and break below the weekly resistance, and we will be aiming for 136.70, 137 zone, which is the next actually weekly resistance level as well.
Yeah, but that's true. And the reason this is not a major pair, I know that, but I like your Euro Japanese yen. That's one of my favorite currency pairs besides the majors. Just like you said, because you're able to see, it reacts good to news, and then you're able to trade it as well, because you can have the volatility you want to have. If you want to see a top-down analysis, to be honest, you see that there is some compression in the price on the consolidation in the price on the monthly. If you go on the weekly, we see almost exactly the same. You see in a horizontal support, you see the resistance is in a downwards. It's now touching the resistance, so that's nice. We can go further to the daily. On the daily, we see another pattern forming with an uptrend up, but you see that the resistance wide room is just exactly where the weekly is as well. You will have here the monthly resistance higher, but yeah, what could we see if we go to the weekly for that, for the 1 hour? Sorry, on 1 hour you see, I like the pivots as well, so I put some pivots in to see what happens. You see that the pivot was broken here. You see that the price on the 1 hour is ranging, and what I'm waiting for is a retest of the monthly resistance and a retest of it, and to see to go short from there. If I want to have to look at the next one, that's the pound dollar, and I will take that for this one, on the one higher. Yeah, we will take this on the bit longer term. You see here the nice percentage as well, what people do, and that's I think we will discuss this later on in the webinar, but more than 50% are going for a buy, but on the monthly it's ranging. I was able to put it here as well if you want to, but it is overall, it's ranging. It is in the box. You could draw up this line a bit further, and then it was retested with a test, false breakout. If you see on the weekly it is rejection on different levels. You could say that it was from here to here down as well, but the last couple of weeks it is testing different levels to see what happens. On the daily, we see a triangle forming, and I like patterns and the charts to see what happens. I also look at where the price is if it is in a range, because if it is in a range, yeah, it will be no trading zones for me. But triangles are nice to trade up on or from, and we need to see if there is something what we could do with that triangle. If you can look at the 1 hour, the 1 hour is also ranging. It uses the resistance as well from the daily. So either way, we're waiting for the break of the triangle or the resistance. Just like I said, this is for the top-down analysis. This is only for the 1 hour or the 4 hours if you want to trade. And yeah, that means that you do not have trades on this kind of analysis every day, but it gives you a good overview of the price and the movements of the price of a currency pair you're trading on.
Thank you, Jeremy. Guys, this webinar is in a partnership with our partner called Trade 360. With this partnership that we have agreed with them, I'm going to be sending you the link as well right now. You will be able to just go ahead and click on this link that you have just received, and with this you can get $50 live account with no commitment at all, and you can put the information that you have received out of this webinar into live trading action. Okay, now let's get back to Jeremy's comments and also the currency pair. Especially, I want to drag your attention for Euro Japanese yen, which was the first pair that we discussed, and later on I'm also gonna go to GBP USD. First, Euro Japanese yen. As I mentioned, because of the overall Chinese infrastructure change in the world economy, we are looking for Japanese yen to start acting as a safe haven asset once again. This is my personal opinion, all right? So therefore, even if there is any kind of bullish movement from the Euro Japanese yen, my personal expectation would be sell at or as close as 140 40.40 level, 140.40 level. This would be my pending sell limit order. Meanwhile, the event that you should be looking for if you want to take intraday position would be the German GDP figures. No matter whether the German GDP figures come out positive or negative, it doesn't matter. I would like you to make sure that you put 50 period simple moving average on your chart and put it on 1 minute time frame. Okay, let's say imagine that this is your 1 minute time frame. Jeremy, what time frame are these moving average that you are using here?
This is 50 SMA, correct? But it is on the 1 hour.
Okay, the blue one is 50, right?
Yeah.
The blue 150.
And the purple is 200. Yeah.
Perfect. Now imagine that this is gonna be your minutely time frame. Okay, when the German GDP figures come out, do not act immediately, no matter however fast the market moves. So what you will be looking for will be the 50-minute simple moving average, and you will be looking for the candlestick. If the market goes bearish, you will be looking for candlestick to close above the 50 period SMA. Okay, and what you do is that you will give one more extra candle, which is this one as an example, and you will enter a buy position if the market is bearish once again. Your take profit, your stop loss will be just below the lowest low of the market, the recent lowest low. Okay, here will be your stop loss, and you have to put a Fibonacci from the top of it to the bottom. Okay, and the 50% Fibonacci, which is gonna be approximately this level, will be your take profit. Now you're gonna be basically entering at this level to get the take profit over here, and your stop loss will be here. You can apply this on Euro Japanese yen, please write it down. You can apply it on Euro dollar, Euro GBP, and this is pretty much it. Euro Japanese yen, Euro GBP, and Euro dollar. These are gonna be your major trade opportunities. What you are gonna be aiming for each one of these trades will be, you will have approximately 30 pips to 35 pips stop loss per each pair, and you will be aiming between 30 to 50 pips take profit for each pair once again. So in total, just 3 pairs, you most likely are going to be making around 100 pips profit if you follow it properly. Once again, you need to make sure that if the market is bearish, you need to make sure that 1 minute candle closes above the 50 period moving average, and you wait for the next candle to close. End of the next candle's close, you enter a buy position, your take profit at 50% Fibonacci retracement zone, and your stop loss will be at the lowest low of the market. Imagine if the market is the other way around. Let me clean this part. Imagine that if the market is the other way around and it is bullish, not bearish, let's say over here. Imagine this is your market. You will once again wait for this is our 50 period moving average, by the way. You will once again wait for the market to close, or the candle, 1 minute candle, to close below the 50 period moving average, and you will enter a sell position right over here. Okay, your stop loss will be just above the highest high of the market, and your take profit will be the 50% moving 50% Fibonacci retracement zone. Once again, from here to your stop loss, this is your SL level, should be between 30 to 35 pips, and from there to 50% approximately Fibonacci level, you should also be aiming to have also 30 to 50 pips. If you make sure that you are following the strategy and do not get stressed, you will be most likely having approximately 80% winning ratio out of this strategy. Now, the next point that I want to discuss is about the US PPI data. The PPI data overall is gonna be giving you the overall activity about the US economy. Okay, and since it is an important event for this week, the last important event for this week, it will give us a clue about the next possible announcement from the Fed. Okay, and you can apply the same strategy just like the Euro GBP, Euro USD and Euro Japanese yen, but you have to once again apply it for USD pairs. As an example, the strategy that I just gave you, you will be applying to Euro dollar, pound dollar, Aussie dollar, USD Canadian dollar, and USD Japanese yen. So 5 currency pair. I repeat again: Euro dollar, pound dollar, Aussie dollar, USD Canadian dollar, and USD GPY. Okay, and we will be once again risking per pair approximately 30 to 35 pips. If it is more than that, do not enter the market. And we will be aiming to make between 30 to 50 pips profit. Okay, 5 pairs, if you take on average 30 pips profit opportunity, we are looking for 150 pips profit. And most likely you will have 80% winning ratio out of this movement as well. And your 80% out of the 150 pips opportunity is still great market move. So it means that out of 5, you will be making 1 loss and 4 profit. 1 loss would take one of your losses profit as well. So in total, net profit wise, you would be looking for making approximately 90 pips profit out of the US PPI data. You have to be very careful with it. you cannot just rush and take an action right away. It will take approximately 30 to 70 pips right after the news, so you don't have to be behind your platform right after the news. Just give approximately 30 to 70 minutes time frame for the pair to consolidate and find its reversal point, and then you enter with the moving averages. Okay. Once again, this webinar is sponsored by Trade 360, our partner. And if you want to test the strategy that I have just given you, please go ahead and open yourself a live trading account with $50 and try it with 0.01 lot per each of the instruments that I've told you. You will be easily making 20 to 30% profit in just 1 week with this simple strategy, and you can continue and learn more of these strategies in our upcoming other webinars. For your information, our next webinar with AtoZ Forex is gonna be on next Wednesday and on Monday as well. One of the webinars that we have for next week is dedicated to Fibonacci retracement zones and my personal Fibonacci strategy, which is amazing, which gives amazing results for both entry and exit positioning. This is so far it for today. We appreciate your attention for being with us. I appreciate Jeremy for spending his amazing and valuable time with us. Jeremy, thank you very much for being with us today. It was very nice having you and hearing back from your strategy. And please keep doing what you are doing, helping others, helping traders. You are a role model for me. I appreciate it. And
thank you.
I hope to have other webinars with you, by the way.
We will for sure.